Financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
Friends, welcome to this week's edition of Follow the Money Weekly. So glad that you're joining us. Well, we have a great show lined up for you today on Election Tuesday. Yeah, these are the midterm elections for 2014. Oh, there's so many different races that are very tight right now. Of course, Republicans and Democrats watching the polls very closely today to see what's going to happen. Hopefully, you have done your civic duty and you've gotten out and voted. You know, as an investor over the years, I've learned that even if you don't particularly care for the political process or you even feel like your vote really doesn't matter, but from an investing standpoint, it's one of the smartest things that you can do because you find out what exactly your community is debating and you find out a new trend perhaps right before it happens, like a new school breaking ground or, maybe some sort of new, like in my state, a new farm bill, different kinds of things that you can use to then fully understand what's happening. Whether you're a real estate investor or whether you're a local business owner, these things are important to us, as investors. And so I would encourage you, obviously, to go out and vote because it's your right and because it's your civic duty, but also as a wise move. As investors and business owners, it's good to know what's going on in your local elections. Well, we have a big show lined up for you today, mainly focused upon precious metals. First of all, we're going to be joined by one of the top silver experts in the world, David Morgan. He's a friend of the show. He's been on before. He runs silverinvestor.com. He'll be here to talk about what's happening in the world of silver investing. You see silver prices as of this week now testing the upper 15s, even down to 16 this morning. Very difficult time for silver investors in general, and we'll get some insights from David Morgan. We'll see what he has to say. After David, we'll also be joined by our good friend and also another friend of the show, Axel Merk. Axel is one of the world's leading experts on global currencies. In fact, he runs several different mutual funds that are focused upon currencies, including one that I own, the Merk Hard Currency Fund. That's ticker symbol MERKX. Axel and I will discuss the current state of the dollar. We'll also talk about the Swiss Gold Initiative and gold and silver. We'll be talking about several things as well. And as always, we'll be joined by our precious metals advisor, Tom Cloud. He'll be here with an update on gold and silver. We've got so much to get into, so let's dive in right now with our interview with our good friend and silver expert, David Morgan. All right, well, joining me on the line today is David Morgan. David is well known for his work as one of the world's leading silver experts, but he's not just an analyst. He's also one of the world's top silver investors. In fact, he's appeared on CNBC and Fox Business and has been interviewed by the likes of Wall Street Journal and Futures Magazine. He appeared first on FTM Weekly Radio back in November of 2011, and we're very pleased to have him back on the program. David, it's great to have you on the show today.
Jerry, thanks for having me.
You're just coming off of the 12th annual Silver Summit, held each year by the Cambridge House, which is really considered the world's premier silver event for investors each year. I know you were a headline speaker. What are some of the takeaways you can share with our audience from the event?
Well, it wasn't that well attended in amount of people, but as far as the quality of people, it was as high as ever. I mean, most of the feedback I've got from the vendors, and it was certainly more than one, was quality of people had more insights into these companies and investments than any other show they attended. And again, heard that from more than one vendor. So they were fairly pleased that, the attendance was such a high quality or high caliber of investors. And a lot of them were serious. This is a point in time where I think the people that do come to these type of events, especially a silver focused event, if you're there, it means that you're in this market probably at a pretty big depth, a great amount of understanding, and you're there for, serious business, so to speak. So, I would say on that basis, it was definitely a success.
David, right now, as of this interview, the price of silver is hovering just about $17 per ounce. Now, we haven't seen prices this low, as you well know, since 2010, early to mid 2010. For investors who are new to silver and are staring at these prices, it looks like an attractive entry. But before we talk about the individual investor, I'm curious what impact these current price levels are having on silver mining companies. How are they coping, especially since the average total mining costs in bringing an ounce of silver to market often exceeds the current market price?
Well, obviously, they're doing everything they can to cope with it. And so they're cutting any way that they can. And that means, no overtime, no weekend work, shifts. They're doing wherever they can cut costs, they're cutting costs. And then, of course, on top of that, they're looking at ways they can cut costs further. But there's only so much they can do. The one thing that they have in their favor right now is that cost of energy's come down. Oil's dropped in price. And, of course, the mining industry is highly energy dependent, as are almost all industries. So that's a little bit of a help. But nonetheless, and if it continues a lot longer or much longer, then some of these situations, some of these miners are going to have to curtail their operations one way or another, do minimum work week, possibly shut down. I mean, that's certainly not out of the realm of possibility. So we'll just have to wait and see. But, they've cut everything that they can so far. But, I talked to a few of them individually at the summit, and a few of them thought there were ways they could cut even further. And of course, they're going to explore those.
The Silver Institute released a report last week stating that according to their research, David, investors may increase net silver purchases by about 1 billion ounces over the next decade. What's the appeal for investors to hold physical silver like coins and bars? For those in our audience who are new to the concept, what's the appeal?
I think there's several. I mean, anyone that looks at the silver market on a cursory basis and does a study of it will determine that silver has two demands, and that's investment demand and industrial demand. And a lot of silver is actually used up, meaning that it's taken out of the equation, whereas all the above ground gold basically still exists. So the appeal to silver is that those two factors, and also the fact that the ratio of gold to silver is so high, meaning that you can get a lot of silver for an ounce of gold, and that varies quite a bit. Silver is more volatile. Silver doesn't have the status as money that gold has, but a lot of people are attracted to it for a variety of reasons, and primarily it kind of fluctuates, Jerry. Times it acts like it's an industrial metal, and that's the way it acts, and there's other times it acts like it's a monetary metal, and that's how it acts. Probably the best illustration of that was the past bull market with the Hunt brothers. And once it got to a certain level, that last year from January of 1979 to January of 1980, it acted primarily as a monetary metal and went from $6 to $50. So we had an 800% increase in that final year. And once silver goes, there's very few commodities that can keep up with it, meaning that the moves can be explosive, breathtaking, beyond belief, that type of thing. And I really think we're going to see that again in this bull market, but it's really tough to make those kind of statements when you're looking at, sub $17 silver now. But if you can buy any commodity, if it's wheat, if it's corn, if it's oil, whatever it is, under the cost of production, and you have some patience, you're almost guaranteed you're going to make money. So that's where we're at with the silver market right now.
Now, that new 1 billion ounces of silver, where is that coming from, David? What are they basing that on? And is that new investors that they're expecting, or is that just normal demand that they expect over the next 10 years?
Well, I only read it once, and I probably should reread it, but the way I read it was it's primarily investment demand. I mean, industrial demand has increased significantly with the technology boom. I mean, if you look at how much silver was used a decade ago or so, it was about 35% of the market. Now it's over 50%. And primarily, it's a very small amount in your, smartphone, your laptop, anything electrical or electronic, and there's more of those gadgets and gizmos all the time. So that takes a little bit of silver in each application. So that demand really has flattened out. I mean, it went up significantly in the last few years. It's flattened out. It's what the Silver Institute indicated was investment demand. And that's hard to say. I mean, you have to, you can't visit everybody case by case and say, why are you buying silver? But it's for the reasons I outlined. But as I think, and the Silver Institute didn't say this, these are my words, is that as the economic conditions continue in this melee where there's so much uncertainty in the market and there's so much volatility in all markets, including not only, the housing market or the stock market or even the bond market, that people will seek seek safety. Gold and silver, particularly gold, are crisis hedges. They're not necessarily inflation or deflation hedges, although those arguments are made all the time. They're really an uncertainty hedge. And when you're uncertain, you go to something that's physical, that represents wealth. And many people that understand the system realize that it's the only asset class that's money and used as money outside of a counterparty risk situation. So I think that's it. Those are, again, my words, but that's the driver, consciously or unconsciously, that will drive people in the silver market.
The Fed's been trying to manage those risks, and they're trying to keep the uncertainty to a minimum by all of the QE3 that they've been doing, that historic QE3 program, which just came to a conclusion this week, David. What's your response as an investor? Do you expect to see a new QE4 right around the corner? Is this just basically a game before we get the next setup?
My view is a little different than some, and it's just opinion. It's my view. I think that the Fed is, boxed into the corner. I mean, basically, the only thing they can do is print money, and they've done that, and it hasn't really helped much. Yes, it's helped the stock market, and it's helped the 1%, but it hasn't helped the 99%. Most of the money is either in the stock market or stagnant in the bank's balance sheets. The banks aren't really willing to lend to the small business person or the public at large, so that we don't see any velocity of money. And I'm not so sure that they're willing to go into a QE4 immediately. A lot of commentators think that, it's just a matter of a short amount of time. I don't know. I think that they will resort to that at some point, but the problem is it didn't work till now, from QE1 through QE3, and the cessation of QE3 didn't really work. And so now, is QE4 going to work? And the market knows that, in my view. So what does that really mean? So if you think it through, it's like, well, if you do something that doesn't work, and we do more of what doesn't work, and it doesn't work, you're doing the same thing and expecting a different result. That's one definition of insanity. So we're at a point, Jerry, where I think the markets are going to start reacting in ways that perhaps even the Fed doesn't expect. Actually, let me restate that. Dr. Barry was at the Silver Summit, and he lectures to the Fed from time to time, and he took us aside and also said it to the attendees of the Silver Summit, that the Fed is perplexed. They are concerned. They don't really know what to do, and they're very concerned about interest rates, because although the Fed sets the discount window and they give all their member banks, their buddies, money, if you want to call it that, currency, I should state, at a certain rate, and then they're able to leverage it and make more currency on top of it by the bond market, by the debt markets. But again, it's not going in the public. They don't have total control of interest rates. They have a great control of them, but the market itself is bigger than the Fed. And so we already saw that in the bond market. There was a massive amount of bonds that traded here recently. And I think someone at the Fed, or a few, probably saw that and said, So it could get to a situation where interest rates start to go up by the market determining interest rates, which can happen. And that would probably really put a quandary into the Federal Open Market Committee, like, now what do we do?
You're listening to the voice of David Morgan. He is a silver expert, silver investor, and he runs the website silver-investor.com. David, you mentioned the gold-silver ratio. Let's go back and visit that for a minute. It's one of the figures I believe that's the most important. I've been a long-time silver investor, not certainly as long as you have, but for a fairly long time. And I know that the silver-gold ratio is just something that I've watched very closely. It's currently around 71, but I believe, as most silver bulls do, that it's going to trend downward over time. Can you briefly explain what the gold-silver ratio is for our new listeners to this concept, and explain why it's so relevant to precious metals investors?
Now, the gold-silver ratio is how many ounces of silver it takes to buy an ounce of gold. So right now, as you said, it takes 71 ounces of silver to buy an ounce of gold. That's what it is. As some people say, it doesn't matter. Well, it's a division problem. It matters because you can determine every day. What it tells you is if silver is performing better than gold or worse than gold. So it's a relative measure as far as which metal is performing better relative to the other. And when I started and silver was at the all-time bottom, the ratio is 80 to 1, and now it's 71 to 1. So if you started when I started, then silver still outperformed gold, believe it or not. But that's me cherry-picking, the start point. And so, we don't have to do that. But that's what it measures. People argue that the in-ground ratio, or what I call the natural ratio, is roughly 10 to 1 or 9 to 1. And why should the market determine a 70-1 ratio when the natural ratio is 7 times different, 10-1? And really, there's no answer for that. I mean, if you use that logic, you'd say, well, platinum should sell for, 15 times the amount of gold because it's 15 to 30 times rarer on gold, depending on whose figures you use. But it does show a trend. And what's interesting is if you go back and study the silver market like I have, and that is that the natural ratio from the 12th century up to the 17th century was 12-1. That was the monetary ratio and the natural ratio. So the market determined what the ratio was correctly based on what the natural ratio was for century after century, 12th century, 13th century, 14th century, 15th century. And we're talking a long time. And then the monetary ratio came in and was established by, man stating it is thus, and they pegged it at 15.5-1. And from that time until now, it's varied between roughly that 16-1 ratio, which is not where the ratio comes out of the ground, although you hear that all the time on the internet. That's not true. There could be a mine or two that does that, but overall, it's it was 12-1. It's now about 9-1. Regardless, it's gone as high as 100-1 a couple times and been as low as 16-1 when it acted like money during the panic of 1980 when there was just a ton of buying into the precious metals, gold and silver, and these markets really took off. And of course, that was a momentary time. I mean, I probably as guilty as anybody on the internet of saying, it hit $50. So I don't think what we emphasize enough is that was a one-day event. So that's important to know. If you're an investor, you want to be able to buy relatively low and sell relatively high and not think that you can get the exact top tick. That is, of course, an amateur's game, thinking that can be accomplished. It cannot. So, if you look back and say, well, I got in at, under 5 and I got out at over 20, that would be reasonable, or 25 or 30. I mean, you can, play a mental thought experiment and determine for yourself where you thought you might be able to get out. Not to say I haven't met a few along the travels that did get out very near the top, but nonetheless, that's not the way to plan it. Regardless, if you do it on an inflation-adjusted basis, silver certainly has underperformed a lot of asset classes. And that's really hard to comprehend when you realize how indispensable the metal is relative to modern-day technology. I mean, everything that we touch that, again, is electrical or electronic, especially electronic, requires silver. It's indispensable for the application. And so it's very valuable in that way, but yet the price is under the cost of production for a primary silver producer in almost all cases. There's a few mines. I mean, Tahoe, which got the Silver Bull Award, the Silver Baron Award at the Silver Summit this year. I think they're all on sustaining costs of somewhere around 11. This is why grade is so important when you're choosing a mining company, and what we emphasize, in the Morgan Report and the type of investments we have. Just to pat myself on the back, and sorry for that. But, I'm down, if you want to say that, a little bit demoralized in a way, Jerry. And I looked at the top tier of the Morgan Report, and what I found interesting is from the time we got in on all those investments, and the top tier are these buy and hold, go to sleep at night and don't worry about it. Every one of those is still positive except one. And I don't know too many people that could say that specialize in the metals, that from the time they said buy this company and hold it, every one of them is still in the positive zone. Now, I may be wrong today as they're doing your interview, but when I looked about a week ago, that was the case. So not really to pat myself on the back, just how serious I am. We are at the Silver Investor team trying to do our best for those that are interested in the sector. And Jerry, as you well know, we've met, time and again in, live and in person at different conferences. I do not preach you should have 100% of your assets in the metals. And I know how you diversify. I've read your book. I know you have all these income streams, and I know you need to spread out. And I say the same thing. It's true. You don't really want to be tied so hard to one asset class that if that one asset class, has these kind of swings or, for whatever reason, goes against you, you're so demoralized that, it takes you out of the game, so to speak. So enough said on that, but I thought it was important. When I saw that, I can't really beat myself up too bad. I mean, even though the market's certainly gone against us for over 3 years, our basic tenet of buy and hold investments still are working.
I think it's worthy of bragging about because there's not too many people who can say that. So I think that's very important to point out. Hey, one final question before we run out of time here, David. Precious metals investors are abuzz over what's happening in Switzerland. On November 30th, voters are going to vote on 3 initiatives as a part of a gold referendum, including a 20% increase in gold reserves and that all central bank gold should be held inside the country. What do you make of this gold referendum? Is it likely to pass, or is this just political hype?
Boy, that's a tough one. I'm just finishing up the Morgan report that'll go out this weekend. I hope it'll pass. I don't know. Jerry, I hate to say it, but I will. The older I get, the more cynical I become. If it's a free market election, I think it'll pass. Not to say that there's some tampering in the electorate or not. There could be, but I don't rule that out anymore. I used to. I used to think things were much more above board than I've learned. But anyway, I'll just read you what I say. It's only one paragraph further. The Swiss vote coming at the end of the month, November 30, 2014, to bring back the gold and basically back the Swiss franc with 20% gold. It is an event that could quickly turn the psychology around from bearish to bullish literally overnight. Most we have talked with think this referendum will not pass, but some of the polls indicate that many Swiss are favorable to this passing. We are watching carefully and fully expect that if it does pass, that the gold will trade lower almost immediately, which is counterintuitive but expected, as our length in the market provides insights that sometimes these very bullish events are met with vast paper selling, so the mainstream press can announce to the world that it was a non-event. And of course, that would only take place for a little while. So that's what I wrote about it, Jerry. Take it or leave it. That's my thoughts on it currently. And of course, the reason you get a newsletter like mine or yours is because events change, especially in this world that we're currently living in.
Tell us about your newsletter and tell us about your website. How can folks get a hold of you, David?
The easiest way, really the easiest way is just get on Google and type in David Morgan Silver, and they'll get all kinds of stuff. But the website is themorganreport.com or silver-investor.com. You'll get to the same place. We have a free service that you get 1 letter a week on the weekend on Saturday. There is a paid service over on the right in the right-hand window. You can do the pull-down menu and see what services are available. We have a YouTube channel called Silver Guru, and I'm on Twitter at SilverGuru22.
Fantastic. I look forward to seeing you again, shaking your hand again, David. It's always good to hear your voice, and I appreciate you coming on the program.
Jerry, thanks for having me. Appreciate it.
All right, well, my next guest is one I'm very excited to bring back onto the program. He first appeared on Follow the Money Weekly Radio back in March of 2013. He is considered the leading authority on currencies and is the president and chief investment officer at the firm bearing his own name, Merk Investments. Axel, it's great to have you today. Thanks so much for joining me on Follow the Money Weekly Radio.
Good to be with you.
Axel Merk is, as I've mentioned, someone who I've been following now for some time. He actually runs the Merk Hard Currency Fund, which I have told you on the program before that I have invested in as a way to gain a nice exposure to non-dollar assets, a basket of hard currencies. Axel, you were just recently at the New Orleans Investment Conference, and Alan Greenspan was there, made some news, in fact, by way of some of the things that you tweeted out. Alan Greenspan, according to a recent article that you wrote, was very blunt in sharing some of his insights. Why don't you share some of the comments you heard that surprised you during that conference?
Well, the biggest surprise probably was that he flat out said that I never said the central bank is independent. We always have this idea, at least, if, that central banks should be doing the right thing. And of course, in practice, we have seen in recent years that they haven't been doing the right thing. But even in the Greenspan era, he kind of says, oh, well, Congress sets the mandate for the Fed, and we are just doing what they're telling us to do. And when pushed on that, he really didn't back off from that. And basically, because he was told, well, you facilitated all this binge spending that got us into all this trouble, all these entitlement obligations. And he says, well, we all have it backwards. It's Congress that does the spending, and we're just there, so to speak. And so that was a little bit shocking. He then did go into some other details that were just as shocking, that at least from a former Fed chair to say that. He said the Fed's balance sheet is a pile of tinder that hasn't been lit. Inflation will eventually have to rise. And then what really freaked me out is that the FOMC members fellows are very smart. The reason that freaked me out is because they have always been smart at the central banks. In the Reichsbank, they were very smart. It doesn't mean it ends well just because the folks there are smart.
Yeah, very good point. And whenever I first saw that he was going to be speaking at the New Orleans Investment Conference, I kind of got a feeling in my gut. I wondered if it was a Trojan horse. I know that he has a background as being a gold file. I know that he's a former Ayn Rand a follower. But did you see that coming out of him in the conference, or did it seem as if he was there to pump up the Fed and protect his buddies?
Well, a couple of things. First of all, he spoke because he was paid. Second of all, yes, he did discuss Ayn Rand. That was actually the introductory discussion. Didn't really say anything too striking, but it became very clear that it's one thing to be theoretical and love all the things that are the right thing to do, and it's another thing to be actually in charge and having to navigate the waters, and then you're printing whatever needs to be printed. And he's kind of the embodiment of that says, yeah, when you are in power, you do what you got to do, and then when you're out of power, you say what ought to be done. And it's just very depressing to see that somebody who is, I mean, we may love or hate Greenspan, but most people would say he's pretty smart. And having somebody like that who's kind of throwing away his principles to put us down this path that we've been on.
Axel, during the conference, I know that based upon your article and many others, that Greenspan basically said that gold prices, in his view, are heading higher, no doubt in the foreseeable future. And I want to talk to you about the U.S. dollar, and I know it's all connected in many ways to that. But first of all, let's talk about gold. What was his general tone, and what are your thoughts on gold going forward?
Well, first, his thought was that if history is any guide, we will inflate our way out of this, that governments have a pretty bad track record of actually paying down their debt. And my take is, the reason I like gold is because we cannot afford positive real interest rates, not in the short term, not in the long term. The folks who are very optimistic about economic growth think the federal funds rate, short-term interest rates, might be as high as 1.75% at the end of next year. Well, on a real basis, after inflation, we would still have negative rates. In 10 years from now, if we had good growth, if we went back to the historic cost that we would have to pay on our debt, we'd be paying about $1 trillion more a year just to service our debt. We can't afford it. The Europeans, the Japanese have very related problems. And so a piece of brick, a golden piece of brick that pays no interest is a good substitute, I think. At least you don't get negative interest rates on a real basis. So that's why we like gold in the medium to long term. In the short term, the market obviously has not liked gold, has loved the dollar because everything in the rest of the world is in shambles. Everything is so great here. I don't think the rest of the world is quite as bad. Maybe Japan is a little worse than people think, but the U.S. is not quite as great as far as the outlook is concerned. We've priced in such great news that we're going to have such an accelerating growth. I don't think that can happen and will happen. So the market has gotten ahead of itself, but it's obviously not the first time in history that the market is getting a little bit ahead of itself.
You're listening to the voice of Axel Merk. You can find him online at merkinvestments.com. He's one of the world's leading authorities on global currencies and economics in many ways and investing. Axel, I'm curious about the U.S. dollar. I told you I want to talk about it, and it's one of those things where the narrative that I have been preaching for a long time, going back to the mid-2000s, 2005, 2006, I know the narrative that you've been promoting for a long time is this concept that the world eventually is going to realize what the U.S. dollar really is and how unsustainable it really is. And yet, in July, we saw the beginning of a major rally in the U.S. dollar. This placed major pressure, of course, on other global currencies. It put pressure on U.S. commodity prices. In your opinion, is this recent rally purely an emotionally driven rally based upon global economic fears, or is it something else? Are we missing something? What are we not seeing here? Why is the dollar so strong?
Well, part of it is because other central banks have been much more forceful in talking down their own currencies. Where you have a global slowdown, it's one of the key reasons why commodity prices are so low. And every major central bank had been out there trying to trash talk that currency. And I had a chat with a voting member of the FOMC a couple of weeks ago. It was an offline discussion. And I said, you guys always seem to be focusing on the dollar late, meaning only once it actually hits the U.S. economy. Much of the rally in the dollar was late in Q3 Q3, and so the companies are only going to complain now in Q4 at the end of it, and then early next year, the Fed is going to have an issue with it. Well, sure enough, just briefly thereafter in the FOMC minutes, the Fed did raise the voice about the dollar, but just briefly so. So still, on a relative basis, the Yellen Fed has been fairly quiet about the rising dollar, whereas the rest of the world, everybody loves to grow based on exports, and they can't get their currency weak. Draghi, the head of the ECB, extremely frustrated, and now we see, of course, Japan taking out a bazooka, trying to weaken the yen, and so the Fed is just lagging in that game, and it's added to the narrative that everything seems to be heading higher in the U.S., and so yes, that makes the market to go ahead of itself in the short term. The biggest threat, nonetheless, that the developed world is facing is economic growth, because once you have economic growth, well, the bond market might be in a free fall in many countries around the world, and then good luck trying to finance these deficits.
Axel, how are you actually managing your own clients' money around this? Are you viewing this dollar pop as an unsustainable, reaction that's going to have a similar reaction to the downside, and so you're positioning accordingly? Or do you think this is a sustained trend that may last for some time until we figure out where the global economy is heading?
Sure. We actually have 4 currency mutual funds and 1 gold trust, and they all do slightly different things. We have 2 strategies, including the hard currency strategy that you mentioned in the introduction, that are managed baskets of currencies, and basically they allow investors to diversify away from the dollar, and you're riding these waves up and downs with the ultimate idea that we got the better printing press than the rest of the world does. All the 4 funds, by the way, have been short the yen. And then we have an absolute return strategy. It's more of a currency war strategy, very tactical, becoming really a risk management strategy that doesn't really have an ex-ante bias for against the dollar, and that did very well in Q3. And so there we were able to take advantage of some of these things, even when the dollar strengthens.
All right, I know you've been bullish in the past on the euro. I have been too. I fully expect that the European Union, everything that they've done has been such a laborious project. It's taken decade upon decade to get here to where they are now, and they have much invested in the European dream. And so the euro itself, to me, has always been something that would only go down in a absolutely positively worst case scenario, and I mean disintegration. So I guess I'm a bull long term on the euro, but of course in the near term it's perhaps a bad bet with what's going on over there. Tell us about your philosophy about the euro. Do you agree that the euro is here to stay? We just have to deal with it, and that it's going to be a flawed currency like the U.S. dollar? Do you think that the euro may one day actually challenge the U.S. dollar as a global reserve currency? I just want to know what you think about the euro and going forward.
Well, in 5 years from now, I would very much think the euro is going to be much stronger than the dollar. But having said that, when earlier this summer, or late in the summer, Mr. Draghi threw the kitchen sink at the euro bulls, well, the euro bulls, including us, we ducked. We substantially lowered our euro exposure. Keep in mind also that much of the market is moving these days on announcement, not on action. And so he's made all these announcements. And in fact, if he were to implement some of those, that might even be a positive for the euro. He introduced new liquidity facilities. Well, whenever they've been used in the past, the euro has gone up, except the uptake has been very weak. It turns out that banks have been returning the liquidity, and on a relative basis, relative to 2008, Canada has now surpassed the European Central Bank in its printing press. That's because the banks have returned the liquidity. It's different from the Fed, where the Fed dictates how much they print. In Europe, they provide liquidity, and if they return the money, there isn't so much they can do about it, except quote-unquote outright QE, except, of course, what is that going to help? As the cost of financing for Spain, for example, has gone from over 6% on a 10-year to about 2%. Well, what more of a stimulus do you want? That is not the problem. The problem is, again, that the banks are challenged, and then conversely, there isn't enough demand. And one of the reasons there isn't enough demand, and we've had headwinds, is because of the sanctions of Ukraine. Again, the printing presses can't fix that. Ultimately, we're going to get inflation with all the money that we've printed. I agree with Greenspan there on the box of Tinder, but it's going to first happen in other parts of the world and then going to be exported to the Eurozone because, again, it is just so much more difficult to induce inflation in the Eurozone. In the meantime, people think that because Europe is a mess, the euro has to be weak, but there is no relation to the currency strength on that. Japan, the bigger mess that Japan had been, the stronger the yen was. You don't necessarily need economic growth to have a strong currency. And so many people get the euro wrong, but in the short term, of course, the euro was beaten down by Draghi Draghi, and now let's see whether he's going to try to print some more money. And then we obviously have to watch that in the short term, what's going to happen.
As an authority on global currencies, I'm curious about your opinion on the rise of cryptocurrencies, as they're being called, in particular the rise of Bitcoin. It's got a lot of people intrigued. In fact, many people who perhaps are looking for the benefits provided by gold and silver and the fact that they provide a hedge against a falling dollar have instead kind of fallen in love with Bitcoin and what it represents. What do you think about Bitcoin as someone who tracks and follows currencies, and what do you think the future of such a thing is?
Sure. Well, I'm fascinated by the technology, but I don't think it's a currency. And to answer the gold-related question, if I had to store something for 100 years, I'd much rather have it in gold than in Bitcoin. Now, some Bitcoin folks disagree with that, but the reason I would say so and claim so is that we can't even watch movies that were digitally recorded a decade ago because the formats have changed. And so the technology is going to change too much for that to be practical for long-term storage. In the short term, it appears to me Bitcoins are a bit like delayed debit cards that fluctuate wildly in value. What I'm fascinated about, though, is that it initiates a discussion about fiat currencies. So from that point of view, there's value. And then I do love the decentralized ledger characteristics of it, that you can do transactions and you don't have a central authority. Having said that, for Bitcoin to grow up, it does need to fit into the financial system. And many Bitcoin lovers don't like that, but anything successful will be regulated, and Bitcoin will be too if it is to become successful. In context, by the way, a Bitcoin ETF, an exchange-traded fund, addresses many of the concerns that the regulators have, because that's then you have to buy it through your brokerage account if you buy it through an ETF. And the concern that, oh my God, you're just using it to launder money, those sort of concerns might fall by the wayside. And so I think the Bitcoin technology is going to be applied to many other things. For the time being, I think it's more suitable to sharing airline miles, if there were a Bitcoin-related airline mile thing, than it is as an actual currency.
Right, interesting. Okay. And for the folks who are listening, Axel, who are trying their best to manage their money and trying to protect themselves in this crazy global economy, what are some things that they can focus upon as we look forward in the global economy? What currencies in particular do you think will outperform in 2015?
Well, the best thing is really for people to get educated. I can tell you which currency I like today, but I'm going to change my mind tomorrow. I can encourage them to follow me on Twitter. Axel Merk is my Twitter handle. I think that's really the best thing to do. There isn't a single best currency around because everybody's trying to debase their currency these days. And so people have to realize that there isn't a safe assets, that it is about risk management. We like the renminbi, the Chinese currency, better than others. Long term, we like the euro. In the short term, one should watch what the Swiss are doing with the election, where they are voting whether they need to back more of the currency by gold. And otherwise, we have to really follow what the central bankers are doing, because ultimately they are the ones controlling the printing presses. The good news about our policymakers is that they're quite predictable. And again, follow what we do, read our newsletters. We have a free newsletter available at merkinvestments.com, and check out and what you can do to educate yourself to be prepared and listen, obviously, to your program.
Oh, fantastic, Axel. Final yes or no question. The Swiss Gold Initiative, will it pass or not?
There's not a yes or no answer. I do believe that what's fascinating about it is if it is to pass, it's introducing a gold standard to the back door, because they're not allowed to ever sell gold again. And so even though they're only required to back their currency by 20% gold, over time that has to rise. Unfortunately, because the government doesn't like it, even if it were to pass, they'd find ways around it with derivatives and whatnot to probably not implement it the way it's supposed to be implemented.
My guest today has been Axel Merk. You can find him online at merkinvestments.com. You can also follow him on Twitter at twitter.com/Axel Merk. And that's Axel, AXELMERK. Axel, thanks so much for coming on the program. We'll have you back on soon.
My pleasure.
Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
Well, the FOMC confirmation hit the precious metals market right in the face last week, as we thought it might, and in some cases it hit it even harder than we thought it would. But the hawkish tone of Yellen is good on the short term for stocks and has sent stock markets up, and yet we're seeing now that corporate America is really hollering. Today we've seen several articles where their goods are so expensive, they're going to have to start laying people off because the dollar is way out of price range of where it should be and will be in a few months. But certainly on the short term, the dollar is going up, stock market's going up, and the precious metals are getting knocked down. Now, as we look at this thing, we also happened over the weekend, we saw the Bank of Japan surprise everybody and announce a large increase in their current QE program, which had a sharp rally for the dollar and has pushed it up to like 87.5 right now, and another rally in equities to send the stock market up near 17,400. So all this right here is pushed down, so we got to look at our stops on the gold and silver, and we think the gold thing now that's broken below 1180 will probably go down to the next target of 1140. And hopefully that will be the bottom. If it did go lower, 1085 would be the next number that we see on our chart would be the bottom. But hopefully it won't get down that low on gold. But I want to talk a little bit more about silver this week because the supply problems have begun. The Royal Canadian Mint has us on a 14-day delay for silver maple leaves, and one of the largest COMEX bar companies has us on a 7-day delay for 100-ounce COMEX brand silver bars. I've only seen this happen. I haven't seen it happen since 2008 when the price of silver got below the mining cost by over $3. In 38 years of doing this, I've seen the price go below the mining cost 3 times. This is the 3rd time. And every other time within 5 months, not only did it go back to the mining cost, which many people are calling $18.50 an ounce. Others are saying it's $19 an ounce average. But whatever number you want to use, when silver's down at $16 and change, it's nearly $3 below mining cost any way you look at it. And then with the volume of silver exploding on the buy side, there's a complete disconnect between paper silver and real silver. Because once again, the paper silver, you cannot take delivery of silver in the ETF. When you're ready to come out, you have to take a check. And that's what we're watching very closely this week is to see the overbought, oversold situation in silver. So for me to sit here and tell you it might not go a little bit lower, I can't tell you that. It might go down to $15.80. It may break all the way to $15.20, another dollar below where it is as I record this. But that's not even the issue anymore. The paper money situation in this world is completely out of hand. The megabuck banks and megabuck investors are moving into metals quickly. That's the reason you can't. It's the reason the shortage is piling up. Big purchases being made not only in Shanghai. In 1 month in Shanghai, first full month, they sold what is equivalent to 1/4 of next year's output from the ground, just in 1 month. And we're seeing that is going to just do nothing except continue to pick up. So I can't tell you where silver's going to bottom, but I can tell you it'll be back at mining cost in no more than 5 or 6 months. That's been the worst case scenario every time it's gone below. But if you're buying a spot price of $16 to $16.30 and it goes back to $19.30, you've got a nice 17-18% profit in 6 months. So I don't know where else you can get that. And certainly supply is going to only get worse. And then as the dollar tops out and starts down, it accelerates it. And the other thing to look for is the increase in premiums. We have seen it every time in the past. So not only we have the price of silver, but then you got to look at the premium cost to get in as these refineries go up on their cost. So we think it's a great time to be in the silver market. We're not saying it might not be a little greater time in a few days, but certainly at this level, it's a gift. And once again, I'll repeat what I said last week. It feels a lot like 2008 when silver got all the way down to just below $10, sat there 2 months, and next thing you knew, 36 months later is at 47. Went from $10 an ounce to $47 an ounce. And I think this time you're going to see it go from 15 or 16 back to that 45, 47 level over the next 2, 3, 4 years at the outset. It's just too much of it. And especially now that we know the industrial demand is going to pick up as Japan and Germany both have allowed quantitative easing to go forward. So we'll keep an eye on this for you. Palladium has done what I said it would do last week. To disregard gold and silver. Palladium's over 800 and still climbing. And with the news out of Tokyo, I expect it, as I said, by the end of the year to be back testing 900. So if you missed it at 750, you missed it at 775, you can get it now a little over 800 spot price, and I think you'll have a very nice return on palladium by the time we get to the end of this year or into January and February. If any of you need to talk to me, you can reach me at 800-247-2812. That's 800-247-2812. If you're not getting our email blast, you can sign up at FTM Daily and go to the Precious Metals button, and we don't share your email with anybody. It's completely confidential, and we send out 2 or 3 email blasts a week to do that. So hopefully next week we'll have this market turned around and we'll have some more news for you. For this week's Precious Metals Market Update, this is Tom Cloud signing out.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812.
Welcome back to Follow the Money Weekly. And here's Jerry Robinson.
All right, friends. Well, that brings us to the end of our program. Thank you so much for choosing to allow me into your life each and every week. It is an absolute honor to be a part of your life right here on this program every single Tuesday. And as always, I leave you with this final word, this time from the book of Proverbs, chapter 15, verse 22, where it reads, "Plans fail for lack of counsel, but with many advisors, they succeed." You know, friends, when you're trying to get your financial house in order, it's vital to begin with a plan. You've heard that old saying before, people don't plan to fail, they just fail to plan. And don't forget, we can always be of help to you in that. We have created our own Christian Financial Advisor Network. You can fill out the free brief online form to request some financial advice simply by going to ftmdaily.com/advice. Let us know if we can be of help. You can also call us at 800-609-5530 if you'd like to find a Christian financial advisor in your area. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next Tuesday. Until then, God bless.
All of the information contained on Follow the Money is strictly for informational and educational purposes. The views and opinions of our guests and sponsors, including Tom Cloud and Jay Peroni, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry and Jennifer Robinson do hold their insurance licenses and may offer consulting on life insurance and fixed retirement income products. Jennifer Robinson is an investment advisor representative with Faith-Based Investor, LLC. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a